I often get asked what's Goal and Capital stance on debt. There's a lot of videos out there with different takes on how we should manage debt, and my philosophy is pretty simple. If you have an interest rate that is sub 6%, we should be in no rush to pay that off. If you look at all the data, investing in the market is likely going to outpace 6%. Now, granted, those returns are not guaranteed, but we could expect that type of return. So your money should be working harder for you in the market. Real estate, fantastic debt. Student loans, obviously we need those to get an education and maybe further our job. Those are going to be the interest rates that we might not want to race to pay back. And then lastly, let's talk about credit card debt. The Dave Ramseys of the world, they hate credit cards. In fact, they'll tell you to cut it up, throw it away, and only use a debit card. I could not disagree more. If you use a credit card in a smart way, it can be super beneficial. I, in fact, only use a credit card. I haven't used my debit card in 10 plus years. I treat my credit card like a debit card. I use it, I immediately pay it right off. If you're paying it off every single month and treating it like a debit card, you're not paying the 20+% in interest. In fact, you may be earning up to 3% cash back for using so. So if you think about all the money you spend in a year and get 3% back on that, that's a good amount of money that you could put to work in the market. And not have to pay 22%. Now, using credit cards and not paying it off, that's a different story, and I definitely recommend not utilizing it in that way. Every situation is unique. This doesn't fit every mold, so reach out to us, and I'd be happy to kind of show you what the best payoff schedule or strategy for you is.